Hello and welcome to Commodity Champions, your weekly dose of what's brewing in the commodity space. I'm Manisha Gupta. Well, our focus today is the agri commodities. The sector has been battling with low prices on the back of a bumper output and policy interventions on the other. Let's take a look at the top three concerns that's bothering the farmers and the industry as of now. One, of course, is the low import duty on the edible oil, which is hurting the domestic industry. The second, of course, has been in sugar, where the prices have seen some pressure as government asks the industry to supply more. And on three is the pulses prices, which are trading below the minimum support price on bumper output. Well, joining us to talk about that and much more and to understand on what lies ahead for the farmers, industry and the consumers, let's get in the word from the government. Joining us now is Agriculture Secretary Shobhana Pattanayak. Welcome to the show, sir. And for the last 10 to 15 days, we've been hearing that there have been meetings at the PMO, at the IMG level as well, especially for the edible oil import duty. What has been the conversation and about the industry and the sector? Because everybody really seems to be watching out that one announcement. How far are we away from that?
No, basically, as you know, the oil has been made available at an affordable rate to all the consumers in this country. And much of our oil demand is basically imported from outside. The total demand for oil is roughly of the order of 24 million tons. And last year, we domestically produced around 10 million tons compared to 8.5 million tons, which we were doing so far. Because of a good crop last year, our domestic oil production is of the order of a little over 10 million tons. So still there is a wide gap of roughly 14 million tons, which needs to be imported from outside. And this is mostly, the imports are basically palm oil. So the question which is for consideration is whether the import duty structure is at the peril of the farmer, or is it, and secondly, another type of debate which is going on in the country is whether there is a differential between crude palm oil and the refined palm oil, so that the solvent extractors which are in the country, they have enough jobs at hand or not. So basically, if you see these two areas of interest which may be of importance to our country, we have found that, the palm oil is perhaps the cheapest oil in the country. And it does not really compete with other forms of oil, let's say the mustard oil or let's say the groundnut oil, because these oils are costly. If a palm oil costs 65 to 66 rupees per kg, roughly the cost of mustard oil, or for that matter soya oil, will be little above 100 rupees. So there is a cost differential. So basically they do not compete. But the question then arises in some areas where a little bit of the oil seeds are sold below MSP. Only to that extent we need to address, because there the farmer gets affected. And if you see that horizon, then we find last year, basically there has been some price levels below MSP, especially in the case of groundnut, and that too reported in case of Gujarat and perhaps a little bit in Rajasthan also. So basically, and we carried out what is called the price, under the price support scheme, we carried out the operations in Gujarat, and we bought some groundnut oil. But this is only a temporary phenomenon. So therefore, right now, the question which is to be decided is all the oil seeds which are imported from outside has an import duty structure of close to 30%. And the refined oil which is imported from outside is of the order of 20%. And the crude oil which comes from outside is of the order of 12.5%. Only in the case of palm oil, the crude oil is, the import duty is 7.5, and the refined oil is at 15%. So basically we need to address these differential duty structure, and that's perhaps the thing which we need to look into. But right now we are in the midst of a Kharif season. We are not so much looking into the, it does not really threaten the farmers' interest at this point in time. Maybe as we move ahead, perhaps it would be of interest to us.
So, sir, are you saying that the differential in duty may not be corrected immediately, that you are going to wait until Kharif sowing is over and then might move on to it?
No, exactly, it is not that. That's what I want to say, that this particular, we have to strike a balance between our farmers' interest and the consumer interest and the industry's interest. And this discussion is still going on. It's very German. It has not really reached a finality for me to say anything at this stage.
So prices have been on a decline, especially when we move on to the pulses sector as well. We are looking at a good crop this time around, and that's positive. But while the crop is good, and not just in India, but in Myanmar and African countries as well. So we are looking at higher crop from major producing countries. How do you look at the whole situation? And is there any possibility of export ban on pulses being lifted?
I can only say that, we had procured close to 2 million tons of pulses last year. We have created a buffer stock, and that has also brought down the price of the pulses in the market. We are, and I'm certain that these areas which have come under correction this year will be able to support pulses at least above MSP. That is what is expected, because apparently this season of Kharif is basically targeted for tur. So most of the tur which has been gets sown during this period, and we are closely monitoring that area. And I'm certain that this year also we'll be able to repeat a good performance. And we are very cautious about about the import of tur. The government and its agencies are no more importing tur. It is only the private sector which is importing. Right now there is no tur in the international market. It's true that the tur comes from Myanmar, but that's around November, December that it's likely to come. So we are also looking at it closely, and what should be the duty structure so far as tur dal is concerned. And we are closely monitoring these all the pulses.
So that point is well taken. But last year we as a country were trying to bring down the prices. There was a shortage. You created a buffer stock. The government was importing as well. But this year the situation has totally turned around. How do you look to change this year-on-year firefighting that the government has to do?
See, I can tell you that some things get auto-corrected. Like this year, you see the tur area has come down. It's close to 15% of the area has come down. And definitely this will have its impact in terms of, we do not expect that the tur is going to rule below MSP in the coming season or the days to come. So this is one correction which is taken place. Number two, so far as urad is concerned, I must tell, urad is always ruled above MSP and it's doing very well. This year the area under urad has also gone up. The moong dal, or the green moong which we say, that is always above MSP. The ordinary moong is of course subject to, sometimes it is below MSP because moong dal is a 60 days crop and we produce it multiple times. But we have extended the support of purchasing moong in a very big way. And with this, secondly, we are also learning as to how to really maintain these buffer stocks. With all these years, we never really procured or maintained buffer stocks in most of these pulses. And the pulses have a shelf life of maybe maximum up to a year. So definitely we need to dispose this stock in the open market, or for that matter. We have got definite plans to see that it is disposed of and it cools down the market.
Sir, I also want to touch upon the sugar as an industry. There have been various policy changes that we've seen in the last 2 or 3 months, and the prices are in control now. But with the festive season approaching, anything that you are looking in that direction?
Let me first qualify the statement that sugar is actually looked after by the Department of Food. I am not a commodity expert, but I can tell that all along the government's intention is to ensure that at least sugar is available to consumers at least at around 40 rupees a kg, and government has always made efforts to see that it's available. We do not expect sugar to go through any crisis except for a brief period, maybe sometimes during the coming and that was 3 months or so from now. But that was expected not now, it was expected a year back also because of the cyclical nature of sugar production and this being a long duration crop. So I am certain that we will have policies in place to cool the sentiment. So far as the sugar farmers are concerned, they are anyway taken care of because of the prices which government declares from time to time, and the mill owners even rise to the occasion to give them that price. And some of the state governments are also equally proactive in trying to extend the price little higher than what the prices are declared by Government of India. So I don't see from the farmers' welfare point of view, so far as sugar is concerned, to any areas of concern.
Well, sugar prices, while are under control, we've seen the wheat prices gain up as well. There has been a monsoon concern in some perishable commodities where we have seen a price rise. So what is the government's preparedness in balancing this ahead of the festive season?
We will be continuing to take proactive farmer policies, and also at the same time ensure that the consumers are also not put to difficulties. In fact, today consumer is perhaps having one of the best periods in history so far as the prices are concerned. So, I'm certain there will be course corrections, there will be corrections in terms of prices, which we'll be witnessing. It already started. You see, onion was ruling very low and it has started picking up the prices, which is now much more stable. That same is true of many things. The tomatoes were hit a little high figure of in several parts of the country, but that was due to unseasonal rain, and now and definitely the first half of August always has this problem. But from August 15 onwards, I'm certain the prices will be much better and it will be much more affordable. So we are actually always calibrating our policies, keeping the interest of our citizens, keeping the interest of our own people, and I'm certain that we are very sensitive to it.
Well, that point is well taken. But one final question. If you look at the sowing numbers, they have been very encouraging compared to the last year. What is the number that the government is working with in terms of some of the important crops as of now? And do you think that we perhaps will exceed expectation as far as the previous crop is concerned?
Overall, I tell you, the sowing has been extremely good. Year on year, we have an increase of more than 10% compared to last year, and we hope to exceed our target by the time Kharif is over. But there are some areas of concern. You know that the south interior Karnataka is a difficult spot for us because the rains have not reached in adequate quantities there. So we are closely watching that. In fact, at the daily weather bulletins, we are trying to collect and to ensure that whether because the south interior Karnataka comprises of 7 to 8 districts and they grow many different varieties of crops, and we are a little bit concerned about that. So the same thing is true of Marathwada region. There is deficient rainfall, and that is one area, but Marathwada witnessed very good rains last year. So we are also concerned about that area, and we have some contingency crop planning to be put in place in case the crop fails completely. There is a deficient rainfall in western UP, whole of western UP, but that may get covered up because IMD projections are very good. So overall, I am expecting a very good crop year for during 17-18, and we expect that we will not only repeat the performance of last year, but it will far exceed the production of last year.
Thank you so much, Mr. Pattanayak, for being with us and really clearing a lot of air about production, prices and some policies as well, which the various sectors are watching out for. So that was the government's view on commodity production and prices. With that, it's time for a short break, but we're not done yet. Praveen Dongre, Chairman of India Pulses and Grains Association, and M. Manikam of Shakti Sugars will be joining us on the other side to share the industry view.